Did you catch it? What did you do with it, Dan? مثل MG at the open? I haven't watched MG today. Oh, this made a crazy run. Well, yeah, I see. It wasn't that clean at the open. But after this engulfing, and I think Andrew, by the way, Andrew called it to the long side here, and he said that taking it to the long side right here would be a good idea because of this engulfing, then a hammer, higher highs and higher lows, and you have the 5-minute chart. It's strong on uptrending, so yeah, this would have been an amazing entry to the long side there. I haven't. Okay, I'm not sharing my screen. Oh, this made a crazy run. Now I'm sharing. Yeah, I see. It wasn't that clean at the open. But after this, yeah, so this is the place where Andrew, by the way, Andrew called it to the long side right here. He said even before taking it to the long side right here would be a good idea because of this engulfing, then a hammer, higher highs and higher lows. It's strong on uptrending, so yeah, this would have been an amazing entry to the long side there. Okay, I'm not sharing my screen. Good now. Oh, this made a crazy run. Now I'm sharing. Yeah, I see. It wasn't that clean at the open. But after this, yeah, so this is the place where Andrew called it to the long side right here. He said even before taking it to the long side right here, we need to chart. We have this engulfing, then a hammer right here, and higher lows. Then you want to really low. It's strong on uptrending, so yeah, this would have been an amazing entry to the long side there. Yeah, this was a good one. Okay, I'm not sharing my screen. Good now. Oh, this 3 to 1, not bad. Good job. Now I'm sharing. Yeah, I see. It wasn't that clean at the open. So glad to hear you guys. Yeah, so this is the place where Andrew. I don't think we can just give it some shooting star on the 2 minute chart. We have some right here. When I go so aggressive with this type of setups, I usually even put them above the body. Okay, but if it's like so tight and I go this 3 to 1, good job. 30 cents that's so tight. That's why we just give it extra 10. So glad to hear you guys. Yeah, so this is the place I don't think we can just give it some shooting star on the 2 minute chart. We have some right here. When I go so aggressive with this type of setup, I usually even put them above the body. Okay, but if it's like so tight and I go this 3 to 1, that I actually traded the same. I think I traded it to the short side there as well. Yeah, so this is the place I don't think we can just give it some shooting star on the 2 minute chart. When I go so aggressive with this type of setup, I usually even put them above the body. This is where I actually dealt with this. There was no reason for that. I actually traded the same. I think I traded it to the short side there as well. Yeah, so I actually I don't think I will give taking shooting star on the daily chart, the 5-minute chart, doing some sort of look at the pattern, broke view up. When I go so aggressive on this type of setup, but I don't really like to see that really stocks which are above the AC. This is where I actually dealt with this. There was no reason for that. I actually traded the same. I think I traded it to the short side there as well. Yeah, so I actually okay. I have no idea why it's repeating. Just give me 1 second, guys. No, I think it's on YouTube. Someone is telling me that it's not clear there. Let me check XSplit quickly. And that's it. Okay, it should be fine now. And just thank you. The YouTube link, I will post it here in case you're interested, and that's it. Okay, now let's go. So look at this. Squeezed above view up. When I see stocks squeezing above view up but they are still below all the moving averages, I don't care about taking them to the long side. I actually wait for a short setup on those type of stocks. I just let them do whatever they want, especially the first 10 minutes. Once they go below view up, it's actually a good sell setup. This was a little bit late. I wouldn't have entered right here, but I think you wanted to see what it's going to do at the pre-market low, which was also smart. This is good. You could have got earlier, but yeah, this was good as well. I would have entered somewhere right there for this setup. And look at this. This is an amazing move right there. Let me show you actually a trade from today. I took on AAL, and a trade from yesterday I took on CCL. So this is AAL today. Similar setup, right? And look at this. It opens strong, right? I mean, not strong below view up, but squeezed above view up, did an engulfing new low, and that was my stop loss only this week. When I go in these type of setups to the short side, I don't put my stop loss at the high right there. I just use the wick, the previous wick, as my stop loss. On the 5-minute chart, if I shorted it here at this candle, or here at this candle, my stop loss would be only the wick again. I wouldn't just put it somewhere up there at view up. So it was short, partial at 11.62, exited at break even. And look at this, shorted it one more time. And look where I get subbed out. There was no reason for me to get subbed out. Why did I get subbed out right there? Because I was up for hour for the day. I told myself if I lose this trade right here, I'll be up 3 hours for the day, and I didn't want to be exactly at the goal. So I bailed on it. But because of this, I actually missed a really good move. I had a really tight stop loss on this thing. This was my stop loss right here. Around 8 cent stop loss. If I caught this move with 8 cent stop loss, around 60 cents move, this would have been a great day. So yeah, we should always accept the risk. I mean, if we don't risk, we won't make any money. And let me show you some trades of yesterday's stocks, which opened up strong a little bit and then ended up selling off. I think I saved them. This is it. Yeah, that's one of them. So look at this. This is my CCL trade from yesterday. And it's a similar concept. Look at this. You see where I actually shorted it? No, this wasn't actually short. This was the setup, the trade I wanted to actually share right there. This is not that day. This is it. So yeah, you see this short right here, I shorted it up there. Unfortunately, I didn't take screenshot on the 1 minute chart. I should have taken the screenshot on the 1 minute chart. When did I short it? I shorted it here once it bounced off this level. And why did I take it to the short side at this level here? Let me show you the 15-minute chart. I hope I took that. Yeah, you see this? Selling pressure here, and we had 1 or 2 more weeks with selling pressure before. That's where it bounced off, started going down, and despite it went and squeezed above view up, I don't care about it for long unless it starts pulling back, holds a view up again, and starts going back up. That's where I'll be interested in a long side. Before that, it's only a short for me. I think I've taken another similar setup to it yesterday. I think it was on the SPY. Yeah, it was the SPY, definitely. Yeah, you see this is the same thing. It opens up looking strong, right? I mean, look at the 15-minute chart. It's been downtrending. On the daily, the SPY started doing this. I mean, it was dropping, came back up, and now it's doing this reverse ABCD pattern there. So not that strong on the daily. Yes, it's opened up strong, but look at this. This is not a trend, right? It's going up, going down, going up, going down. When I see this, I see struggle. I see that it can't go to the long side. It's not as if it's going clear, huge candles to the upside, then a small pullback to the downside, then clear move to the upside, and then to the downside. I see that it's wicking. It can't make it to the long side. Combining that with the pre-market price action, with it being below the moving averages, I just decided to take it to the short side all the way to this daily level right here, the rest out closer to break even. So yeah, same thing here on AAL. Where was that trade? Let me get it back for Avi. Yes, it went above view up right here, but that doesn't mean it's so strong. I would have got a little bit earlier entry right here, or if it gave a good entry somewhere up there, but it didn't give that, unfortunately. So good job, Avi, there. Let's see what Ramlal did. Ramlal traded BA to the short side, and look at this. I see the 50 moving average is here. I want to see actually the 5-minute chart as well. Let's open BA here. Is this from yesterday, Ramlal, or today? 16. It's today and it's 11:15. I see that. You took it to the short side somewhere 11:15, somewhere here. Why doesn't it look like it? It's the 2-minute chart. So yeah, that's where you shorted it. This was the place where you shorted it. I see that. Now here I like it. Looking at this, I like it. Looking at the 1-minute chart only, it didn't look so good because we can't see what happened before, right? It looks here like it's forming some sort of an ascending triangle. It breaks above VWAP. Yes, it's struggling to go longer, but looking at this only, I'd assume that it can pull back and continue going higher. But yeah, this was a good short and a good entry. Look at this, the 5-minute chart. It's weak on the daily, right? And what is this here? This is a parabolic pullback, right? On a reverse ABCD pattern, A, B, a pullback, C. Now you can take it to the short side here, of course, and I think I wouldn't have waited for this M shape right here. Looking at this, why is that? Because it's more weak. It's getting back to the 9 on the 15, to the 20 on the 5-minute chart, and making a new low. The risk is so tight, and if it gives just a 2-to-1, it wouldn't even be the low of the day to get the 2-to-1. If you are patient and strict with the rules, you can always do this. When you see a parabolic pullback, you wait for the M shape. Why is that? Because you don't know what's going to happen here. I'm afraid of those parabolic pullbacks because of one thing. It could do a higher low, similar to what happened here, higher low, and then just continue going higher. So I want to see what it's going to do around here. Is it going to break up? If it's breaking up this high right here, then it might actually uptrend. If it doesn't even make it to this high and starts pulling back maybe of the pre-market level, of the moving average, lower than it, I mean anywhere, that would be the confirmation for me. An M shape with a reverse ABCD pattern, good entry right here, or an earlier entry based on the 1-minute chart or 2-minute chart, similar to what Ramlal did. So good job, Ramlal. That was his entry right here. And yeah, I would have held a little bit more. You got a really good entry, and remember, when you're getting an entry with a really tight stop loss as close as possible to the support, you need to let it run. We know that BA moves a lot. It can move $3 a day, $4 a day, at least $2 a day, right? Having a 20 or 30 cents move, if the setup works out, it will be a really good reward. So at least 5% to hold, just to practice holding, would have been definitely worth it. But the entry was definitely amazing. Lenny. So Lenny traded Tesla. You took it to the long side, not bad. Small ascending triangle on the 1-minute chart, a hammer which is showing you buying pressure, and a 5-minute open range breakout bouncing off a daily level. This was amazing. Good entry, and I wouldn't say that this setup actually worked out. It did make a move of $9. I see. Okay, now yeah, it's not actually bad. It's a good move. It's just that this range is so huge, $25. What was your stop loss here, Lenny? Let me zoom it in. Let's see, guy. Okay. I hope you guys do hear me here. Okay, that's good. So what was your stop loss here, Lenny, on this setup? Was it the low of this week or a new 1-minute low? Or you didn't have one when you entered? This was yesterday, so you don't remember it. Okay, no problem. I mean, looking at this, if I had taken this setup to the long side here, I think I would have given it maximum these bodies. Why is that? Because this week is just too much. It just wicked below this. It did a fake reverse ABCD pattern. I mean, if this was downtrending below the moving averages, and I see it squeezing above you up, doing 2 shooting stars or 2 reverse hammers, and then a new 1 minute low. This is where I usually take it to the short side. I think if I was watching it, I might have taken it to the short side there, but then it just does a fake breakdown and squeezes back up, offering a good entry to the long side. And because of that, definitely my stop loss will be only this area right here. I wouldn't use actually the wick. This was just fake right there. You held it. You didn't take any partial at the daily level, unfortunately. Remember to take partials at daily level, especially the 2 days ago low, 2 days ago high pre-market levels. Those are really strong support and resistance levels, but you managed it well. You took it here. This is also not a bad entry. I like this one. You could see that it's making higher low waves, a higher low, a higher low, a higher low, sort of an ascending triangle, but not clearly an ascending triangle. Finally breaking up the range right here. You take it to the long side, early partial a little bit. I would assume that once it breaks this range right here, it will get back to the daily level and higher. Unfortunately, it didn't do that, but if they work, it should do that. So yeah, this wasn't bad entry. Good setup. Exit at break even, and then a little bit of FOMO there. Remember, don't go to the long side when the stock is doing lower lows and lower highs. If you see this right here, and look at this, it did break this range, right? And once it breaks the range, I would expect it to either shoot higher or at least make a decent move. Now this wasn't a decent move. This I would call it a fake breakout. Then it's closing on the 5-minute chart with a wick above it. Now this is selling pressure. It's not how we want to see breakouts, right? This is not the best looking breakout setup. It's making a doji at the high, then it's making lower highs, lower highs, lower highs. I would just avoid taking it to the long side here. If I was really long biased, I would wait at least for a new 5-minute high. You got subbed out, good thing, and then it's just making a new 5-minute low. Not the best place to take it to the long side there. I mean, but good job sticking to your risk to reward and getting stopped out there. The first one was amazing, definitely. So done. Let's see what you did there. You got frustrated over trading. Yeah, that happens, especially after a good trade. If you lose a couple, you want to make it all back and just call it a day. But unfortunately, what that does is just it digs a bigger hole for us. Now let's see what you did here. Then your entry on both of these trades was a little too early. Would you have avoided the second trade because of the body being too big for a new 2-minute low? I was getting around 3 to 1 on both with a target of the 9 moving average and the 5-minute chart. Also saw that for both of these trades there was a huge ask on the level 2 above the price, and level 2 looked bullish with big asks. Okay. So you see, you tried to take a parabolic reversal. Now remember, what are my rules to take parabolic reversals? I want to see a good looking 2-minute candle. This is not a good looking 2-minute candle. This is just a bullish 2-minute candle which gets all the way to the daily level. There is no selling pressure there. There is no shooting star, no doji. Now this candle I like. I wouldn't have taken it because it just did a leg up. If this candle right here was here and then it did a new 2-minute low, I would have taken it 100%. But since this candle wasn't here and it was just a bullish candle, I wouldn't have taken it on a new 2-minute low. So yeah, unless it had 2 shooting stars or 2 dojis on the 1-minute chart. I'm not sure what was inside those candles. If there were 2 dojis or 2 shooting stars, I would have taken it. If not, I wouldn't have taken this thing here to the short side. This thing here, it was also an early entry. Look at this. Again, huge body candle, right? It's still just strong. No reason to short here. Even no new 2-minute low, if you look at this, right? Then it does a new 2-minute low here, but again, those candles are not the best looking candles, right? They're just white bar candles. I avoid these candles. Why is that? They mess the risk to reward. If I take it to the short side here, the stop loss should be at least the body. And that would be around 20 cents or 25 cents. 20 cents and 25 cents, it's too much. I will get around, I don't know, where is the 9 on the 5 here, but I think it will coincide with this moving average right here. So it will give you only 2.5 hours if it gets to the 9 moving average and the 5-minute chart. Now combine those 2-minute candles with what you saw on the level 2, right? This wouldn't be the best looking setup. A bullish level 2, bullish candles on the 2-minute chart. It's not ready for a parabolic reversal yet. Nagraj, if possible, send it to the off-topic chat so that I don't miss it here. Yeah, I mean, on the moment, we see that it's so extended and the only thing we can think about is the reward we might get, right? But yeah, we should just... Now, this was good. This, I like it so much. You had a good looking 2-minute candle. Look at these wide bar candles. The volume is crazily strong on this thing to the upside. You see that? Now you have a shooting star, you have a new 2-minute low, you take it to the short side. I wouldn't put my stop loss at the high of the wick. Why is that? Because once it breaks the wick, most of the time we'll get slippage, and I don't want to get slippage. If these things work, they work out immediately. I would just tighten it a little bit there. If it goes there, I just get stopped out. This is the first thing. And the second thing, we'll get a better risk to reward if it works out. Look at this. When they work out immediately. They don't look back. You don't need to put your stop loss at the high of the wick. Now here you put it well, right? Your stop loss is here. Here you didn't need to put it at the high. You could have just put it a little bit below that. Now look at this. One of the rules. Wide bar candle. Inside it, a small candle. Now this is a good looking candle. This is good. With a new 2-minute low. Stop loss up there around 10 cent stop loss I see, and 10 cent stop loss, it's amazing in this type of setup. You get 3 R's all the way to the 39. So yeah, this one, it definitely was good. This entry was also good. Yes, the first entry didn't work out, you lose 1 R. You try it one more time on a good setup, you hold on to it, and you get 3 R's. After that, you're still up 2 R's. Before, I'm not sure if this was the 9 and the 5 or not, but before I used to do this. If it goes in my direction and then it gets back to my break even, I exited at break even. Now I don't do that at all. Why is that? I noticed this is happening a lot. Sometimes the move will go in my direction, and especially if it's so extended and way above the average true range, how far will it climb for the day? Yes, sometimes stocks are strong and they can go for a long time to one direction. But if it's like so extended, how far could it go? Usually they will just do a pullback, a double top, and then the big move will happen. So if I take partial 100%, I'll exit the rest at break even. If I don't take a partial, I will hold through this pullback, and that will be the crazy move. Yeah, exactly. The first trade was stop loss was a little bit wide. Your entry on the second trade was good, definitely. Yeah, both of them are amazing. Let's see, Thomas. Live. This was a live trade, right, Thomas? So you took AAL. Let's see what you did that. Extreme reversal. Entry after false breakdown. I like this one. This is amazing. And the 1-minute hammer, new high. There was room to the 9-moving average in the 5-minute chart, but not strong. Follow through. When it rejected the daily level, you exited. It never hit your stop loss, and it made the move up. But you don't feel bad getting out. Let's see there. Okay, so look at this. AAL downtrending today, weak, right? And I like this. It's enough extended from the 9 on the 5-minute chart. What's that? Around, I don't know, 40 cents, 50 cents by the moment. Yeah, it was around, yeah, around 30 cents, 40 cents to this moving average. Now, look at this. Sort of reverse ABCD pattern. And it does break the low of the day. When I see that the stock breaks the low of the day, or we see that, we expect it to just do what? It broke it. If people are long here, they should get stopped out once it breaks down, and shorts should step in, driving the price lower. But that didn't happen here. It did break the low of the day by a few pennies only. That was a fake breakdown. similar to what I showed you. I don't remember on what stock. I think SPY or L at the beginning. But yeah, that's it. It was a fake breakdown, then closing as a hammer, making a new 1 minute high. That was your entry to the long side. I would put my stop loss right here. I wouldn't use the fake breakdown week. 11.21. So this was your stop loss, right? This. Exactly. We don't use those weeks as stop losses because that was a fake week. It will just, most of the time, it will not get back there. You took it to the long side, not bad. Held it, sold it. Once it started rejecting, view up, not bad. It broke the trend. You took this one to the short side and it got you stopped out. So yeah, that's a good thing. I wouldn't have taken this one to the short side yet. Why is that? Look at this. You're having a higher low wave, like the first wave, a higher low wave, a higher low wave right there. So basically it's forming some sort of pennant. Yes, at the beginning this looked like those were higher lows, but then once this happened, it was still around those higher lows. It's definitely more bearish than bullish looking at it, and if I would have taken it, I would definitely take it to the short side, not to the long side, but it doesn't look so good with that buying pressure there. Then it's doing some sort of reverse ABCD pattern and then closing as a doji, making a highs. Yeah, it wasn't that clear. Not A+, but not the worst setup. So yeah, not bad. It just didn't work out. Yeah, there was definitely a good risk to reward. It was definitely a good entry. I'm looking at this, it would have been maximum 10 or 6 or 10 cent stop loss, and if it went to the low of the day, that would be around 3 hours. So yeah, the risk to reward was there. The setup wasn't A+, but wasn't bad as well, and good managing there. Let's see what it did on AMD, Thomas. Long open range breakout after 1 minute hammer and engulfing candle. Not bad trade, just didn't work out. Now I wouldn't have taken this one to the long side like 100%, even more than 100%. Why is that? Because of the horizontal moving average above it. If you see it here in the pre-market, it was dropping, right? Then it came back. Yes, it was an engulfing, and then it did a doji. And remember what I told you about this setup? When you see a wide bar candle, then you see a doji or a hanging man or a shooting star, and then the next candle is the candle where it usually decides where it goes, but most of the time it goes to the opposite direction all the way to the low of the candle. This is the first thing. The next thing, supporting this setup, we had a moving average above it. Sorry about this. So yeah, dropping down, pulling back, white bar candle below a moving average, and that's it, a drop. I wouldn't have taken this to the long side only because of the resistance it had above it. Where would I take it to the long side? Once it breaks view up, pulls back, holds a view up, comes back above it, and that's the entry to the long side. Now this also is not so clear. I'm not sure I would have taken it. The candles are not the best. A doji, a wick on the top, a doji, a wick below. It could just continue doing that. So not enough confirmation, but yeah. Then you took it to the short side, right? Long side. Yeah, you get a little bit chopped here. A little bit of overtrading. Should avoid signal candle and gave one after a hammer. Yeah, this was the entry to the short side. If you take it to the short side here, that's good. If you take it to the short side here, that's still enough good. But here we just avoided. We want to see either a descending triangle forming here, or we want to see a setup forming to the long side. Hey, Nono Feliciano. Thank you, I really appreciate that. And if you have any questions, feel free to ask. That made you go down minus 1.4R. Yeah, I see that actually, at least the losses were small, but that's the worst thing. If you take one trade, and that trade is a loser, you are down 1R. If you take multiple small trades, and each one is half R, they will just add up one after another, plus commissions, and you can just get to max loss with those small R's. It's better to just save your bullet to the perfect step. And remember, look at this. This is just the first 5 minutes after the market opened. You still have, I don't know what, 7 hours, 8 hours before the market closes, right? Don't rush it, just to wait for it. Yeah, good job, Thomas. Rachel, let's see what you did there on CCL. Did you take the partial too early? I feel like I always missed out by taking partials too fast. Not sure when to take the first partial. So you took it to the long side, and your long side was, or your long entry, 1137. I can't see the entry. Was it at the new high, or you took it above the moving average here? Is this a moving average, or what's that? You're welcome, Thomas. You took it at 1140. This is 1151, 1152, 1160, 1169, 1170. So I would assume somewhere right there. So I'm not sure about this one. If this was a moving average and it bounced out after this parabolic move, I would say maybe yes, especially if you saw anything in the bid. I'm not sure about the entry, but regarding your partials, I think this partial was early. The 20 on the 1 is not bad. I usually also do that. I take partial at the 20 on the 1. It coincides with the 9 on the 2. And if the stock is so weak, it usually bounces out of that. So yeah, the partial around the 20 on the 1 is not bad. The 9 on the 1 is a little bit early. That's like so early. Why is that? Because remember, the 9 moving average in the 1 minute chart is always close to the price action. And the price action will, especially if it's reversing, it will definitely go through it. It doesn't act as a strong resistance, and you can see that in the previous candles. It's been breaking it all the time, right? And now that you're long in it on a good setup, this is definitely not going to act as a resistance. The 20 on the 1 maybe, you could take some partial there, but definitely not on the 9 and the 5. Once it breaks this level right here, what do you have after that? You have this level right here. You could take partial at. Why is that? Because this was the breakout area. And stocks, when they break down, they usually tend to pull back to the breakout area and then continue the trend. So yeah, this is a pivot point. This is a place worth taking partial at. Then the moving average and above until you just feel that it's not doing anything. So yeah, 1 partial, 2 partials, 3 partials instead of all of those partials. Yeah, but well done on this one. Thank you, glad to hear that. So let's see what you did on RAD. Oh, you took it to the short side here. Now look, I see what you wanted to do that, and I was watching RAD. I also was short biased on this thing. I didn't trade it because I was done before that, but I like the thinking. It was weak, right? It gapped down. I'm not sure if it gapped down or it looked weak on the daily, but anyway, it looked weak. It started coming back. Now this is I don't like. Wide bar candles. Those candles I don't love when I take. If I see a doji or 2 dojis or wicks on the top, then I see new low, I would have taken it 100%. But when I see wide bars, especially if the third bar isn't closed, I don't really take it. If this bar closed red, and then you have another candle trying to go up, then dropping down, I would take it to the short side on the 4th candle. Remember, the 4th, not the 3rd. Why not the 3rd? Because the 3rd candle can do anything. It can look as a shooting star, it can make a fake wick downside, and then it can just simply close as an engulfing, and it will just get you sold out in 20 or 30 seconds. And you could see this. It looked like a shooting star by this moment, right? It almost went a little bit red. It looked like it was ready to break down, and I saw that. I also was short buys on it, and I was afraid that it will go without me, but I didn't take it because I knew the candle didn't close, and it's been a lot of times where I have been trapped by those candles. if the candle isn't closed, just try to avoid it and wait to see how it closes. If it closes a shooting star, even if it makes a small move without you, you can always enter on the new low and then just tighten your stop loss, because the move begins. And if the move begins, it usually doesn't go back up. You don't need to give it much room. Just give it a little bit room all the way to your targets or levels. This was a doji here, a new low. Now this is not the best definitely entry, but at least it's not looking so bad. I considered taking it, but I didn't like so much how it was behaving. I didn't like this wick right here, how it's making higher highs and higher lows. The 1 minute chart looked good, the 5 minute chart didn't look good. I decided to just avoid it, but look now. You see this moving average? You see it closed below it here. It closed below it. Yes, it broke it, but it closed below it and it opened below it. Started going down. Now this was the entry to the short side, but definitely not to the long side. Why not to the long side? I just said it. It's sitting below a resistance level. When will I be interested in it? If it really breaks it or closes above it, and then does a setup to the long side. Because remember, this is just the beginning of the day. It's 10 minutes or 15 minutes after the market opened, and when the market opens, it sometimes makes a nice move at the open, and sometimes it just chops around. It just does nothing, and the move happens after. So you don't need to rush the move. You can always enter when the trend finally begins. And if you miss the move, like look at this. This was the resistance, right? It held below it. New 5 minute low, which is the entry. And even if you miss this entry, because the drop is so violent, you could get in a little bit after. Why is that? Because now it's clear that it wants to go to the downside. It tried to break above view up. It was doing higher low waves. It broke down, and now it's forming a descending triangle on the 1 minute chart, and it's downtrending on the 5 minute chart. You can take it to the short side, tighten your stop loss, and then just go for those daily levels and even more to the downside. No worries, Valentine, it's okay. RNA, let's see what you did on ABT. Five-minute open range breakdown, right? Now let's zoom it in so that you see it, guys. The market opens here. 1, 2, 3, 4, 5. You don't need to take a 5-minute open range breakdown on a 5, like exactly at the 6-minute. Remember these, guys. So look at this. This is the 5-minute candle. It opened here, and 1, 2, 3, 4, 5. This is it. This is the 5-minute candle right here, and this is a wick above it. It's making a new 5-minute open range breakdown. He didn't rush it. Why didn't he rush it? I bet you didn't take it to the short side because it was still above the moving average and above view up. It dropped down, did sort of shooting star. You took it to the short side, and was your stop loss so tight, or you put it above the body? I think if I had taken this thing to the short side, my stop loss will be 1 minute right here, because this is a breakout area, right? It's so flat, and if it breaks it, it will just go to the next daily level. So yeah, that would have been my tight stop loss, and I would have been able to take some partial. But even if you give it some room, that's still good. You added to the short side. Now this added was risky. Why is that? You added on the way down. Remember, when we add, we always add after pullbacks. We add at places we believe we'll get in if we weren't in the trade. And if I see this made all this move and it's close to a daily level or support area, I wouldn't take it to the short side here. Like, it's already did the move. I need to wait for a pullback, and after the pullback I take my entry just to have a defined stop loss, right? It did break it, but it also did a huge move, right? I mean, look at this. The stock here, it did break the daily level, right? And it broke the high of the day at this area. Do we take it to the long side once it breaks the high of the day? We definitely don't do that, because the stock is already extended. It already did the move. And look at this. This move and this move, it's similar, right? Here it broke the 100 SMA. Here it broke a daily level. One could have simply took it to the long side because it broke the high of the day and broke the daily level. We should always wait for pullbacks to have a defined stop loss. Once we see the pullback, once we see that it's holding, we could take it to the long side and then just partial based on your rules. Parabolic reversal, I'm not sure how it looked like on the 5-minute chart. I don't have the 5-minute chart here, but yeah, not bad. This is definitely looking like a shooting star on the 2-minute chart, like white candle, and after that a red candle. What will that form on the 2-minute chart? It will form sort of shooting star. Pull back on 5 minutes or 1 minute. Depends on the time of the day. The first 10 minutes, 15 minutes, even sometimes 30 minutes, I look at the 1-minute chart and I trade of the 1-minute chart. After 10 o'clock, I start trading of the 5-minute chart. But remember that pullback, it shouldn't be small. Like if I see on the 5-minute chart a white bar 5-minute candle and then a white bar 5-minute candle and another white bar 5-minute candle, and inside this 5-minute candle you are having sort of this pattern, I wouldn't take it to the long side here because it did a pullback on the 1-minute chart. Like look at this, this is a huge move and there is just a tiny small pullback. This I will definitely avoid. If it's like only one 5-minute candle or two 5-minute candles and there is a pullback somewhere in here with an uptrend from here, I would take that pullback on the 1-minute chart. So a good parabolic reversal, took it to the short side, partial, exited the rest, and then you took it to the long side. This was only one exit. Then an ABCD pattern to the long side, and another parabolic to the short side. Did you get to your goal trading only one stock? Yeah, this is nice. Like this one I like. This short is amazing. Why is that? Look how it's struggling here on the top. A shooting star or a doji at the high of the day. And then it's just curling down, new low, and that's it. So yeah, this I like the most. This is not bad, not the perfect one. Why don't I like this one so much? Because of this right here. It broke out, right? And remember, when the stock breaks up, it could just simply pull back to the breakout area and bounce out of it. So yeah, the risk to reward will not be there. If the stock is going straight up and then it does the pattern and it goes to the short side, I like it because we don't have pivot points on the way. It can just simply go down to the moving averages. I don't like when we have these points right here. Like here, when you take it to the short side, we also have this point right here slightly. And look at this. It just goes all the way to this point which it held and bounces out of it. So the risk to reward isn't the best yet, but still it's good. An earlier entry would have definitely made the risk to reward better, but still, good thinking there. Now Robinson, let's see what you did there. ABT, you took it to the short side and you took a partial, then you took it to the long side and you started selling off. Was it that? VWAP play, rush the entry a little bit. Stop was above VWAP on the 2-minute chart. Okay, ABCD, place my stop loss right below the 9. Okay, so I see this. And again, it was weak. It was below the... Actually, it was strong, wasn't it? At the open. Let me see ABT. Closing this. Going to ABT, and let's see what happened here. So yeah, in the pre-market it wasn't that strong. It was actually selling off in the pre-market, and you took it to the short side at 934, 935, somewhere right here. You took it to the short side, I'd assume. 1, 2, 3, 4, 5, right below VWAP, right? Or a little bit above VWAP. So yeah, it's not so bad. I'm not sure that I would have taken it to the long side because before the market opened, it made a strong move to the long side. Now, yes, it went up. Yes, it dropped down. I'm not sure what it's going to do. Like, there is no clear pattern or trend in the pre-market, and no clear pattern or trend after the market opens. On the daily though, we are at all-time high and we are clearly uptrending, right? There is no chop on the daily. If you see here, like if this happened here, I will not be biased to any direction because it's just sitting in a range. but when it's clearly uptrending, I'll definitely be biased with the direction of the uptrend. I would avoid all the trades here because there is no clear direction, but after, when it starts forming an ABCD pattern and it's to the long side and it's uptrending on the daily chart, that's where I'll be interested in it. So yeah, your longs were definitely amazing. I would have avoided the short. You still managed to make it a winner, which is a good job, but the long was definitely a good one. So Valentin, let's see what you did on your VZ trade, and then we have David. It has green candles on the daily right there, but the trend is steady. If you just look at it, it's not that it's getting parabolic. The candles, they are not so huge. They are around the average true range. I'm looking at it, and it's clearly uptrending. Today it's getting extended. Like up until here, it wasn't that extended. It was only $4 above the moving average. Here, it was also $4 above the moving average. Here, it's also around $4 above the moving average. Same thing here, around $4 above the moving average. So it's clear uptrend. It's not so extended. Now it's getting extended. Like around here, it's now $8 above the moving average. And let's see what's going to happen tomorrow, or how it's going to close today. Once it gets like so far from the moving average, that's where it's extended. But around this area, it's not so extended from the non-moving average on the 5-minute chart. It's just $4. On all the candles, it's only $4. So it's steady trend. Do you consider the move from prior days? The stock has been on an uptrend and then a pop on the earnings. I was biased that they will start taking profits. I do take my bias based on how the chart looks like, or the daily chart looks like, but I don't care much about news actually, because news just tell me that the stock is in play. My direction is determined by the overall trend and by the technical indicators intraday. So Valentin traded VZ, dropped down enough, extended from the 9-moving average in the 5-minute chart, getting into a daily level. I'm not sure that I would have taken it right here. Look at this. You see this? It's clear uptrend. Yes, you took it to the long side, but where would be the stop loss? You could put your stop loss once it breaks this line somewhere right here, like where you draw your red line. Okay, yeah, that's not bad actually, just to give it some room. It's not the best technical stop loss, definitely. This is the best technical stop loss right there, or the previous day close, or new 5-minute low. But yeah, around here it's not bad, at least to give it some room. Took some partial and you exited the rest for a loss. Now remember, if you take partial, at least for me, I usually exit the rest at break even. Why is that? It's on a clear downtrend. It went to the 9-moving average in the 5-minute chart. Yes, you took it for a reversal to the 9-moving average on the 5-minute chart, or maybe for a reversal. I'm not sure why you took it exactly, for a big reversal or small reversal. But when the stock is clearly downtrending and it gets extended from the 9-moving average in the 5-minute chart, a lot of times it gets into the 9 and then continues the downtrend. That's what happening a lot of times. That's why if we go into these type of setups, we need to exit most of our position to add the 9-moving average in the 5-minute chart, and the rest at break even. Why? Because it can just simply break it and do a reverse ABCD pattern. We don't need to give the profits back. Looking at this after, higher low wave, higher low wave, higher low wave, not a bad long, definitely. It looks like it's already exhausted. It can't continue the downtrend. And look at this. If it did an M shape with a lower high, I would take it to the short side. But you could see that it's starting to make higher highs waves as well. So yeah, the trend has changed. Not a bad long. You took some partials at your levels and the rest at break even. So good job there as well. Now David, would you enter on the break of the first 1 minute of the 5? Yeah, if I entered, 100% I wouldn't enter here because the risk to reward is a little bit extended, but I would be more confident taking the trade here. I might have taken it there, I'm not sure. If I didn't do any trades and I wasn't at the goal and I saw this, I would take this one to the long side after the doji in the 5-minute chart. After the bounce of the daily level, closing above the previous day close, it's already extended from the 9 and the 5, and that could be my target. So David, first entry, yeah, first entry was a little bit late. Like, look at this. Yes, it went into a breakout. I think you took it for a breakout, but it already started the move down there, right? It already did around $2 or $2 and something move. I would usually wait for a pullback before I take it. You took it one more time, but again, look at this. You see your entry and your partial. You got in so late after the move happened right here. Look at this. This is your entry, right? Closer to the high of the day. Exactly. Like the best entry here, you see that ABT is uptrending on the daily. You see that it's forming some sort of pullback. It's holding the previous day close, closing as a hammer, doing a new 5-minute high. That's the best entry, the new 5-minute high. That's it, the entry here. At least here, you could just tighten your stop loss a little bit below the wick or at the previous candle low, and your target will be the high of the day. Instead of getting in long here and having a really wide stop loss and then partialing at the high of the day. Third entry is the same. It's a little bit late. I usually avoid these type of entries. Why is that? It's far from the 9 and the 5. It could just simply pull back to the 9 and then make the move. And look at this. It did that, right? It did a pullback to the 9 moving average on the 5-minute chart where it held it and where you actually took it. You see, this was the perfect entry. I would wait for a little bit a higher candle, not entering at the low when it's making lower lows and lower highs. But still, this is a good one. At least there was a reason to take it. It was strong on the daily. It pulled back to the 9 and the 5 after consolidation, took it to the long side, and that was a good reward. Now look at this. The fifth entry was short. Okay, yeah, the short was good because you could see here that it started running out of steam. It dropped down to the 9 and the 5. It bounced out of it, but couldn't even make it to the high of the day, and then started breaking the 9 moving average in the 5-minute chart. You had the cross of the 9. Of the 50 with the 9 and the 20 on the 1-minute chart. You are having a new 15-minute low, a doji at the high of the day. So yeah, the short setup was great. Your fourth entry was great. Second entry on the setup, it was good, but it was just a little bit extended. This I wouldn't have done 100%, and this, yeah, this was early as well. I like how much you held on this one though. Good job. Nagraj, what did you trade? You traded Tesla. Short and subbed out. So you could see that it was making lower highs waves here. I see that. It was uptrending here. And you took it to the short side here. Look at this. By this moment, it was uptrending here. But look at this. It still was making... Okay, no, not bad. Actually, not bad, yeah. You took it to the short side. It broke the pattern and you got stopped out. So yeah, not bad. It was forming a pennant. You could see these guys that's making lower highs, lower highs, lower highs on the 1-minute chart. And higher lows, higher lows, higher lows. On the 1-minute chart, it broke down and you took it to the short side. Now in these type of setups, sometimes they do similar to what you did. And sometimes what do I wait for? I wait for it to break to the one of the two directions. Either to the upside, either to the downside. Pull back. Find some resistance and then I take it to the short side. To the upside, I wait for it to break it to the long side, pull back, hold something, and then I take it to the long side. It's just for an extra confirmation. But still, this was a good short. Right here, you got subbed out, and then you took it to the long. Now, this long, it was a little bit late. Like, if you took it to the long side here, that would have been perfect. It finally broke this pennant right here, and it started forming an ascending triangle right here. So yeah, this would have been an early entry right at the beginning of the move, right when it formed the pattern and started working out. Yeah, this would have been the perfect entry. This was a little bit late. This is good. This is fine. Not the best because it looks like it's a little bit extended, but I can see a 30 or 20 minutes consolidation, another triangle, you get in as close as possible to the support, and good job, you held it so good. Someone is calling AMD. Let's see what AMD is doing. Wow, what happened to AMD? Like, look at these guys. Isn't this a perfect reversal? A doji, another doji on the 15-minute chart. I bet on the 1-minute chart you had moving average crosses. That's it. 50 moving average with the 9 and the 20 cross. 2 shooting stars at the high of the day. You could short it anywhere, and this was amazing actually. This is an A+ reversal setup. I mean, what criteria do you use for picking stocks to watch in the pre-market? I watch the daily chart. I don't want to see gaps on the daily. Sometimes you see some stocks which are gapping every day, gapping up on the daily, gapping down on the daily, or they are so weaky or stuck in a range. If I see a stock which is uptrending, and I see a stock which is having a similar pre-market price action, but it's in a range on the daily, I avoid it. This is the first thing. The next thing, when I watch stocks in the when I search for stocks to watch, is the breakout areas. Let me zoom out AMD, for example. Let's say I'm watching AMD here. Let me zoom it here. Let's say I'm watching AMD here, and today AMD gaps up and it's some opens here. So I like AMD for the day, for a breakout, for the long side, because it finally broke out above the range. The next day I'm going to watch AMD definitely. Why is that? Because it's been chopping for around 10 days. Yesterday it did a good day, it broke finally above it, and today it also gaps up and it's up trending as well. So yeah, where will I be biased to? Definitely to the long side. This is the first candle after the breakout, and the first candle after it breaks out usually it should be long. Maybe the day after it will drop down, or it will pull back. Maybe 2 days after it will just reverse or do whatever it does. But the first day after the breakout, I'm a lot, most of the time I am long biased. Like AL today, why did I take it to the short side, or why did I watch it? Was dropping, it was coming back, and look where it opened. You see the range here, the up range, the down range, and it gaps down. So I actually took it to the short side because I expected to finally break down this range. Tomorrow I'm going to watch it to the short side, because today it broke the range. I mean, depending on how far it actually goes today, this thing is crazy. And by the way, we have around 600,000 shares sitting at $11 on AAL. If you look at this, let me see that. Where is AAL? AAL. What's happening there? Yeah, you see that? You have 750,000 shares sitting at $11. So I'm actually watching this thing for a bounce out of $11. It depends on how far it's going to hold it. If it's going to hold $11, it is going parabolic, it's extended. If it's going to hold it and make a good looking candle, I might take it to the long side of the $11. But if it breaks this thing, it will just flush down today, I think. So let's see what else we have. Han. You traded Roku to the short side for a parabolic reversal. Now this was good. Look at this. It's clearly uptrending. It's getting extended from the 9 moving average on the 5-minute chart, doing a shooting star on the 2-minute chart, and you take it to the short side. This was a perfect parabolic setup, an A+ parabolic setup. Extended from the 9 on the 5, shooting star at the high of the day, new 2-minute low, take it to the short side, give it just a little bit of room, and partial all the way to the 9 on the 5. If you hold all your share size to the 9 on the 5, it will be amazing. But yeah, this was a good one, Han. Thank you, Chris. Bob Ross. Thank you. You tried to do a reversal earlier. Let's see where you tried to take a reversal. You tried it here, right? I see that. And by that moment, it actually was, yeah, this one was just didn't work out. It's not bad. You see exhaustion here on the 5-minute chart. You tried to take it to the short side. Why wouldn't I really like it so much? Because of this. It was wedging here and it broke up. It could just drop down and hold any level. The risk to reward isn't there, but the pattern is there. It's extended from the 9 on the 5-minute chart, and it's making a shooting star on the 2-minute chart. You see exhaustion there. You see a new 2-minute low. You take it to the short side. Why do I like it here? Because the closest level it can bounce from is this level right here, and it actually almost bounced off of this one, right? So you have the risk to reward. Here you don't have the risk to reward. Aiden traded ZM. Now ZM, once I see this, I'm definitely short biased around here, doing some sort of a descending triangle above this daily level. We had those 2 weeks which I'm going to ignore because they look like fakes, and it's not going to the long side. It breaks down, but look at this. It broke down, but after it broke down, it started doing those wicks right here. Buying pressure, fake breakdown. If the stock breaks down, it either flashes down or it drops down, pulls back to the range, maybe a little bit above inside the range, and then continues going lower. But that didn't happen here. 1, 2, selling pressure, you took it to the long side here. Now, it's a little bit sketchy here. I'm definitely going to be long biased more than short biased. Why is that? You have this moving average right here, which is holding it. You have the fake breakdowns right there. You have the engulfing candles. The daily is also strong on Zoom, but it doesn't look enough ready by this moment. You have buying pressure, then you're having selling pressure. Then you have a huge red candle, then you're having a huge white candle. And you could have selling pressure again and buying pressure again and just a chop. You could just do this, draw the range and wait for it to go to one of the 2 ranges and then wait for the step, or wait for a new 5-minute high. You thought this was a double bottom, right? But look at this. It's 10:30 and 10:50, and the pattern on the 1-minute chart. 10:40 and 10:50, and the pattern on the 2-minute chart. If I would go to a double bottom, I want to see a double bottom on the 5-minute chart later on the day. I could go for small double bottoms if I see a bigger pattern, for example, a parabolic reversal and a double bottom on a top on the 1-minute chart, just as a confirmation. And if I take this setup to the short side, I wouldn't say that I took it to the short side because it was a double top setup. It wasn't a double top setup, it was a parabolic reversal, but this small double top, it was a confirmation. Here it's not a double bottom setup. This double bottom setup, bottom which you see on the 1-minute chart, could be a confirmation for another setup you see, but I can't see another setup here, right? It's making lower lows and lower highs on the 15-minute chart. It's making lower lows and lower highs on the 5-minute chart. It's strong on the daily. If it makes a new 5-minute high, I could just combine this all together. A fake breakdown, going to the long side, holding a moving average, strong on the daily. More indicators telling you that this is a long rather than a short, and that's why I would take it to the long side. Not because of the small double bottom on the 1-minute chart. Because you could see it here. Sort of, where is it? A double bottom right here, right? Or you could say it a double top right here. You could say the same thing here, double top here, right? It's small pattern in a big pattern. We need to combine it or to see it on the 5-minute chart. Now let's see what Henry did. We're actually running out of the time, but we still have only 2 trades. I think we'll be done exactly on time. Now let's see what Henry did. LUV, look at this, huge drop there, a pullback to VO up, held VO up, and I assume that that's why you took it, a reverse ABCD pattern, and it was holding VO up. Was that it? And look at this, like this was a really tight stop loss. Use the second image, it's updated. Let's see the second image. Oh my god, this was a really good one. So look at this, he got in for a reverse ABCD pattern there. Look how clearly it's holding here. And on these type of patterns, how do you enter? This is a descending triangle, or reverse ABCD pattern, or bear flag, call it whatever you want to call it. How do we trade it? Two ways, three ways actually. First one, you take it as close as possible to the resistance, and then you can partial inside the range because you'll have a good reward. And if it breaks down and the pattern succeeds, you will make a really good amount of money, similar to what Henry did here. Second way of trading it, you get in once the range gets tighter with the stop loss and you high, but here your reward is definitely after the breakout. Final way is getting in at the breakout with the stop loss above the last candle. But that's some great patience and good move there, Henry. Two stop outs short, third short attempt, highest entry. So you tried it actually 3 times, right? I can't see it here because this is 15-minute chart, and yeah, look at these guys. Henry shorted it 3 times there. It's just we can't see that because this is a big time frame. If we just zoom it in, I assume we'll see those candles. Yeah, you see there is a triangle here, there is a triangle here, and he got stopped out twice, but finally he got his entry and he shorted it, and I bet you made all the money back and even more after this huge move, right? So that's how we trade, guys. You just keep the losers small and hold on to winners. All you need is one good trade. If you get that good one trade, don't start partialing so fast. You will not be able just to make up for the losers. You need to snipe this good one trade, and once it works out, hold on to it, because we will get stopped out more often, especially at the beginning. But Henry is not a new trader. I remember he's an old member and he's been crushing the market. Good job, Henry. So yeah, guys, do you have any questions? We actually ran out of time, guys, on YouTube. If you have any questions, feel free to ask. I'll type my email here on YouTube. If you have any questions, feel free to email me and I'll be happy to help. And have a good day, everyone. You're welcome. So goodbye, YouTube.